I want to pick your brain.
Sure.
And it's timely. The market's shifting. There's a lot of questions people seem to have. Should I get in? Should I wait?
When I first entered the market, you were looking at approximately 8,000 homes in Perth Metro. That changed overnight. It increased almost twice-fold. We were sitting at about 15,000 homes in 2016-2017 market. That meant a lot more options for the buyers, hence it was called a buyer's market, right? As of last Sunday, Riva stats say that we're sitting at 6,114 homes in the market. What we're seeing at the moment in the last 3 weeks since the budget announcement, we have seen a lot of emptier home opens. Homes that otherwise 4 to 6 weeks ago, we would have 20 to 30 buyers through the door. Now there's been fear. And I believe the reason is every market has a dominant emotion to it.
You're on the ground. Are we still going to get a relative increase in price over the next year? Or do you think we'll plateau? Do you think actually we're going to get a dip?
Have we started, by the way?
We always start.
I love it.
It's a conversation.
I love it.
It's rolling.
Yes,
it's rolling.
sir.
And I want to talk real estate because
Yes.
that's who you are. That's what you do. That's what your company does.
Yes.
And I want to pick your brain.
Sure.
And it's timely. It's timely because the market's shifting. The market always shifts, right?
That's right.
It's
Cyclical.
like the stock market. It's up, it's down, it's up, it's down. You hear the news today and, always look long term.
That's right.
Okay, long term, what is this thing doing? And why am I even interested in it? That's slightly different conversation. I'll go there a little later in the conversation. I want to talk right now. So there's a lot of questions people seem to have around, should I get in? Should I wait? There seems to be more supply.
Indeed.
And that'll be patchy.
Yes.
So I want to pick your brains, go, where is it?
Sure.
Why is it? In theory, and this is why you're sitting in the chair.
Yes.
In theory, with the negative gearing changes, you would imagine there'd be less inflow of investors from over east saying, I'll pick up those established dwellings because they're not getting the negative gearing benefit. They'll still be there, but not in the numbers that they were, 2 months ago.
Yes.
Which opens the market for locals.
Correct.
All right. Talk to me about all of that.
Sure. All right. I'll start off first with where the market is.
Yeah.
Let's talk numbers for a bit. So I'll start the comparison with 11 years ago. When I first entered the market, you were looking at approximately, this is just past the mining boom. So you're looking at approximately 8,000 homes in Perth Metro. That changed overnight. It increased almost twice-fold. We were sitting at about 15,000 homes in 2016-2017 market. That meant a lot more options for the buyers, hence it was called a buyer's market, right? At that time, our market took a dip. As you've rightfully mentioned, markets are cyclical. And we saw that happen over COVID due to the building incentives that came in. There was a lot of consumer confidence. Buyers that couldn't build then moved to establish homes, with reduced that numbers drastically. And we saw the market shift to a supply of 1,800 homes at its lowest in December of last year. Understandably, December, Christmas time is always the lowest activity with people putting their properties on the market, but I'm using this number for a reason. So 1,800 homes Christmas last year. As of last Sunday, Riva stats say that we're sitting at 6,114 homes in the market. That's how much it has gone up to.
That's a decent shift because I remember 3 months ago it was around 3,500.
You are spot on. Correct. And one of the main reasons is that 3 months ago, we were sitting at 900 homes selling every week. That number has gone down now to 647 as of last Sunday. So 300 homes, 250 homes shift of sales. Obviously, that increase week to week has resulted in where the numbers are now. So the ultimate question is, as a buyer, do I wait for those numbers to rise? Or do I go in and purchase property now? Which was your question, Hanif, as well. I think it's very simple. From the ground, what we're seeing at the moment in the last 3 weeks since the budget announcement, we have seen a lot of emptier home opens. Homes that otherwise 4 to 6 weeks ago, we would have 20 to 30 buyers through the door. Now there's been fear. And I believe the reason is every market has a dominant emotion to it. COVID had a market of, had an emotion of, I would say, the fear of missing out. In this market, what we are seeing is a hesitancy market. Buyers are more hesitant to move forward. So as a buyer, our main opinion, or what we tell our buyers, is that I think this is the time that you should be coming in and looking at homes, especially if you're buying your forever home, you're looking to upgrade, you're looking at your first home. This is the time that you walk through the home opens, because now you're not up against competition anymore.
So that's what we're doing in general investing.
Yes.
We go, where is the market sitting? We don't want to be buying when there's a frenzy because the price is going up. And everybody actually really intellectually knows this. Mm-hmm. I think everybody on the planet goes, yeah, duh.
Yes.
Right?
Very true.
But when you get personally involved in it,
yes,
our emotions mix up our rationality.
Well said. Well said. And that's where the issue is. That's what we're seeing on the ground at the moment, right? So anyone that's walking through the door and they're saying, we'll just wait to see what happens next week. I'm sure there's another property that comes up. If you find a home that ticks 8 out of 10 boxes on your list, why aren't you pulling the trigger? And again, you have the opportunity to pull the trigger, not at premium prices now, which is what's happening in the marketplace.
Yeah.
We believe across all suburbs, true market value is starting to shine. And with our main clients, which is the sellers, our duty is to maximize our sales for our sellers. From day one, we are always giving them honest prices. That's our mode of operation, right? Our MO is very simple. We go in, we tell them this is where we think the prices are based on comparables, but we're not purchasing your property. The market will dictate the price. Every seller wants more. Every buyer wants less. So we understand your expectations, allow us to trust in the process, not promise you a price. And I think we've been doing that from day one, even when the market was delivering, 5 to 10% more in results, which I'm glad that myself and the team do that, because now in this shifting market, it becomes a lot, more reasonable for us to go back to them and say, this is what our feedback has been as what we mentioned in our first meeting. If you don't adjust your price quick enough, or your expectations, I would say, quick enough, then your property will go stale in the market. So back to your question about negative gearing, and what impact that has had in the marketplace. I think what changes now is structure of purchasing, because true investors will always find a way, no matter what market they're moving into. And it's just a matter of restructuring their mode of purchasing. Yes, negative gearing does have an impact on those that have held back, but the market is vast enough. Not everybody purchases for negative gearing purposes.
Nor should you. I'll add it in from the finance and investment perspective.
Yes.
I'll probably get hate mail from property spruikers now.
Bring it on.
Yeah. But, if you're buying property just because there's a tax advantage.
Yes.
And I'm not saying that's illegitimate. Mm-hmm. It was legitimate before. It doesn't work anymore. Mm-hmm. I think you just have to be very, very careful. Mm-hmm. I've seen so many people get on board with property spruikers.
Yes.
Saying, you can buy this property. It's negatively geared. You're using your tax money. So the tax man's actually paying it. I go, well, yeah and no.
Yeah.
And then they overgear. Mm-hmm. That's all great when the market's on the up.
Yes.
It's the emotion that carries you. Go, see, we were right. Your property's gone up by $100,000. What happens when the market's not good? If you're not overgeared, you're fine. Don't worry about it. It's totally good. It's a long play. But there are lots of people in the market who are spurred on by property spruikers, mm-hmm. and they'll go and buy 5 or 6 or 7 properties to the absolute max of their limit, mm-hmm. and then the market goes backwards.
Yes, and now they're stretched.
Overstretched.
Yes.
Overstretched. They end up going backwards. Mm-hmm. So I'm not dissing the old strategy. I'm questioning the limit and the value or the amount of risk you're taking. And oftentimes not understanding.
Yeah. And I think that has been the nature of majority of purchases, I believe, over the last few years. So the government's incentive, you believe, is a positive incentive?
No.
Yeah.
No. I'm going to ask you a question on the potential benefit.
Yes.
So I think they personally pulled the trigger because they can, and they've got an agenda.
Yes.
And clearly it's not thought through properly.
Yes.
I don't think anybody could sit here and tell me, yeah, we thought this through properly. Here are all the iterations of what are going to happen.
I would love to see the economists behind it and their conversations, their roundtable conversation, Hanif. I would have loved to have been in that room, because you're right. It is almost impossible to deliver a concrete evidence on how it can produce long-term positive results.
And I'm not saying it can't. I'm just saying it was so rushed. It's not even clear. It's thought through about this much.
Yeah.
Because they can't answer the questions now. So here's something to think about. You say, okay, well, we're going to cut negative gearing out for established properties. Yeah, all right. The idea is, well, one of the ideas I'm led to believe, I'm not even clear on it, but I'm led to believe one of the ideas is if we say, no, Prash, you can't negative gear on established properties, you won't buy them. Therefore, it will free them up for people who want to buy their own home to live in. Yeah,
Yes.
all right, fair enough. And there might be an element of that going on now. So
Yes.
I wanted to ask about that. I think a little ahead. Okay, well, we keep that policy in place. We fast forward 10 years' time. Well, the best return for an investor who wants to buy property in their own name is to negative gear it and buy a new property, which he goes, tick, you can negative gear that. You go, great. And people are getting older. So the old guard sell their houses in the inner city and surrounding suburbs. The investors are buying out in the new suburbs because that's where you can negative gear or an apartment. And now none of the renters can live in the inner city.
That's right.
Why? Because nobody's investing there.
Yes. And rents have gone up. If the negative geared properties are those that are being purchased right now, if you can't claim negative gearing anymore, who are they going to push the cost to? Over to the renters.
The consumer always pays.
Yeah.
So despite all the intellectual goings on and the magical workings, it's the consumer that always pays.
That's right.
Always.
Yes.
At some way, shape or form, it ends up coming out of your pocket.
Very true. That's well said, Hanif. It's the spruiking, right? I think that's what's happening right now. It's more of the fear induced into the market to supposedly soften it. So I think that, in a sense, that has worked. Obviously, we're seeing that on the ground at the moment. And fear is a big thing for a lot of people, especially when they're spending, their hard-earned money on the biggest asset they'll ever purchase in their lives, And your question earlier about whether the negative gearing has pushed first home buyers or people who are looking to purchase their first home into the market, we are in that price range as well, below the 850 mark, and there's still fear, Hanif. And I think the fear is more about what if there's more properties, if I miss out on more potential properties that come on, which means that they're missing out on purchasing what could be their dream house. This is a 9 out of 10 property I'm talking about. It's below 850 in a good suburb. It's well built, and we're still seeing that fear coming from the marketplace. It's the uncertainty. What if tomorrow they introduce another element that we may not have considered, which is what's been happening? I think that's where the trouble is.
So I'm going to backtrack. There are more properties on the market.
Correct.
Now.
Yes.
Is some of that supply linked to investors from the eastern states
Mm-hmm.
who would normally negative gear looking at it and going, I'm not going to buy that anymore.
And then they're selling it.
Well, then they're just not buying. So that
Yes.
stock is now
Yes.
available for locals to pick up.
Yeah. Short answer is yes. You're right. I take this 2 years ago, we would have a property that's probably about 600 to 650, and we would have investors buying it sight unseen. Obviously, they think right now that if there are more properties in the market, they are also watching that. That means that the property prices are not going to be as premium as, or probably it's reached its supposed peak, and hence I'm not going to be purchasing it. Yes, short answer is a lot of that supply is remaining on the market because investors are just not, interstate investors are not looking at that price point anymore. They're moving elsewhere, as they do. They put their eggs across different states, rural Melbourne, Queensland. They're still looking to be more attractive at the moment simply because of value for money on square meter. And I think that's where the trouble is with the WA market at the moment. As I just mentioned, 2 years ago, you would see a property go overnight sight unseen.
So you're on the ground. Are we still going to get a relative increase in price
Yes.
over the next year? Or do you think we'll plateau? Do you think actually we're going to get a dip?
Sure. I think in answer to the last question, firstly, let me preface this by saying that I wish I had a crystal ball.
Hey, this is just your opinion, right? We're not holding you to it.
Absolutely.
We're
I guess-
saying you're on the ground.
Yes.
I just want an opinion,
Yes.
a personal opinion
Sure.
that we will not tie you to.
Yep.
So your personal take on what are you seeing on the ground? What
Sure.
do you reckon? Because you've been around it a long time.
Sure. I think that firstly, the demand is extremely high in WA at the moment. Last year, we had 55,000 people come into WA with only 16,000 homes, new builds, that were completed over the year. So because of that demand, there's still going to be a lot of purchasing happening over the next 1 year. Right now, what we're seeing is it going up by 3,000 homes on the market, as you rightfully mentioned earlier, in the course of 3 months. So that's approximately 1,000 a month. So in the next 12 months, if we see that steady increase without an increase of sales, so if sales remain on a weekly basis, then theoretically numbers would state that we would be reaching a balanced market, which in WA is 10 to 12,000 homes on the market. And a balanced market means that we are going to plateau on prices. I don't think personally that we're going to ever see a dip like we did before COVID. I do think, however, that sellers are not going to get premium prices like they were in the last 2 years. What we're going to see is true market value, which as an auctioneer, I'm very excited to see. 'Cause that's what I believe properties should be selling for. I believe everybody should have a chance at purchasing them at market value, not, at elevated prices. So that's where I honestly forecast the market to go. It is going to plateau. It will take about 12 to 16 months for that to happen based on numbers. And in theory, if the last 3 months is of any indication of what's going to happen in the next 12 months, that's exactly what I'm seeing.
Interesting. That dovetails somewhat into what the data tells me.
Yes.
So I had Dan an economist from ANZ.
Yes.
He's kind enough to do an update with us quite regularly.
Fantastic.
And he's still saying the similar thing. We've got our net migration into WA is still continuing.
Yes.
So more people are coming here.
That's right.
We've got nowhere to put them. We can't build houses fast enough. So although we'll get more houses on the market with the changes, we think we're still going to get a capital increase.
Yes,
They're still
there
going to
you
go
go.
up in price. And if it does plateau, part of that might be interest rate hikes.
Yes.
So people's borrowing capacity will drop. There'll be less people lining up to buy that house because some of them who could have ordered 3 months ago no longer can.
That's right.
And a plateau's okay. For me, real estate's a long game.
Yes.
I don't buy real estate to say I'm going to get rich and in a year I'll sell it. We've had those little periods.
Yes.
But that's generally not why we do real estate.
Very well said. It truly is a long-term investment and probably one of the safest investments you'll ever make in the world as a steady class asset. So I think you're spot on there. It is often a long-term game.
All right. So let's follow that little rabbit hole.
Yes.
All suburbs are not equal.
Correct.
All right. So where are we seeing the suburbs with more prospect of a capital gain?
Yes.
Where are we seeing the suburbs where you go, there's extra value here for a bunch of reasons, but they're very good value?
Yes. I'll start off with that I'm probably being biased here. It's probably an area that I work on a lot, and it's mainly because in the last 2 years I've seen the growth happen, and there's still more growth to take place. Ellenbrook and the surrounds is a huge corridor for it. So talk about north of the river first. I think Ellenbrook is massive for growth, especially after the train line has come in late of 2020, into 2025. So we've seen that growth happen. There's still very good value for money homes, and the area itself, which has gotten a bad rep, understandably, in the previous years, due to the community, has really progressed from it. There are better schools now. There's better infrastructure. There are better main areas. When I say main areas, I mean commercial sections, which has really improved the life for many people in Ellenbrook. With the new film studios that has come up in Malaga, that entire section, an entire corridor, has growth that's almost unseen. Morley is going through a new re-upgrade of Galleria, which is going to see prices go up in the area. Areas that are close to the river. You look at anything that's closest to the river, Bassendean, Bayswater, your mainlands has seen tremendous growth in prices. I think these are still spots where you can get good value for money apartments that are in a city. So we talk about 15Ks. I started with 20Ks from the city, Ellenbrook. We move 15Ks to the city now. And then you talk about 10Ks to the city, your Highgates, your Mount Lawley. They're still really good value for money villas and apartments. So we move then to south of the river. South of the river, where I think has been overcapitalized, is your areas like Gosnells and Maddington. Again, I'm sure people will be able to find treasure, but at the moment, the prices in those areas have truly gone up. But you look at areas further south, your areas like Bertram, areas like your Piara Waters, and it's 5Ks around that area, has seen immense growth and will likely to see more growth, simply because of the growth of infrastructure again around Cockburn Central. Further down south, let's go towards your Mandurah, Dawesville, Rockingham. The new AUKUS project that's coming in is going to bring about 5,000 personnel and their family into that area. That area and the surrounds may see further growth in the near future. I think that would be smart to realize, so that when the project starts to grow, you're going to need more supply, and hence capitalizing on it now would be ideal. You look at further south, Bunbury, Bustleton. I believe those areas at the moment are also overcapitalized, but you still can find good value, large blocks, and buyers, investors should be looking at blocks where there's potential of dual income. So I think that's what you're trying to serve. You're trying to serve the market that can't find homes right now. So with properties that have larger blocks where you can build a container home, which you can get now from Bunnings. I saw an interesting thing the other day, Anif. You can get, I don't know if it's already introduced yet, but it's coming soon. It's probably about like 20 or 25K, and it's a flat pack home that's about 40 square meters where you can build in your backyard. Councils are introducing new laws right now where if it's a certain size and below, you'll be able to do it without a licensed builder, which cuts costs for you. So these are the things that I think investors should be looking at in those areas. And that's where I see the WA market suburbs, which has most potential for growth, and the ones that are overcapitalized.
And the coastal strip.
Absolutely.
That's never going away, right?
That's never going away.
Because I think anything that's near water It's a commodity on its own, isn't it?
Absolutely. No, well said. I missed out an entire section. I love that. I love it myself. You are spot on. I think lifestyle-wise, especially for people who live in WA, the number one thing is water.
Yeah.
We are all drawn to water in some way, form or another. And I think that you're right. The coastal lifestyle, it's never going to see its
And it's
down.
a limited supply.
Yes, indeed. Of quality homes especially.
Yeah. But even if you said, I've got a 1960s home, it's falling to pieces, but the land,
Yes.
you can't. That's the only bit of land
That's true.
in that section.
Yes.
And the demand's always going to be there long term. That's my thesis.
Yes.
If you could afford it, I'd buy it.
Absolutely, my friend. I support that thesis wholeheartedly.
Yeah.
Because I would too. And again, it's just about the concept of being close to the beach, being close to the ocean. It does have, I guess, a gold standard for a lot of, a lot of people.
It's just a
in
human
WA.
being thing, isn't it?
Correct. Yeah, very true, my
it's a
friend.
human being thing.
Very true. Yeah. Yeah, I'm drawn to Denmark and Albany a lot. I love WA for that reason. It's one of my favorite spots to head down to. We head there almost every Christmas, me and the wife,
Wow.
just to go camping. I love, getting away from the city. It's also the only time I can get my wife away from her phone because, that's when there's no signal down there, right? So that truly helps.
Not for long.
Damn it, Starlink. Don't do that to me, Elon. So, one day, my friend.
So let me ask you a couple of questions about your journey.
Yes.
Because you've been doing this for a while and you've been driven since I've known you.
Thank you. I appreciate that, Hanif.
So give me a background of who is Prash?
Sure.
Why on earth did you go into real estate?
Sure. It's an interesting story. Well, I'll start off with me coming over to WA. I came to WA to study international business. And I'm from Malaysia, as you know, Hanif, and coming from an Indian background, I only had 3 choices in my family, right? You either be a lawyer, engineer, a doctor, or you get out of the house, So they weren't that strict on me.
That's
but
the Asian triad, isn't it, for your kids?
Exactly right.
This is your pathway.
Yeah. Otherwise, you're not coming home for dinner. So, they always wanted me to go down those 3 paths, which I loved. Like I'm still an avid lover of medicine. I went to India prior to coming to Perth to do pre-med. And I just found it wasn't for me. I did 8 months of it. You give me the Grey's Anatomy today and I will read it cover to cover. I just didn't find that the learning curve and the years to get to a specialty that I wanted. At that time, I was going to do neuro or cardio. Required me 15 years before I could come out and as it should, and specialize in it, right? As it should. It requires that long of learning. So I decided that wasn't for me. A good friend of mine was in Perth. My parents said, I was thinking about Melbourne and Sydney. At that time, my parents were helping me out, and they said that I'm not going to send you to Sydney and Melbourne, otherwise you're going to be partying there. Little did they know about me in Perth, right? So and then I came over here to Perth and I did international business. And my idea with migrating into WA at that time was to get into a skilled visa. The year that I was graduating, Hanif, so every July they changed the list of the skilled visa. And that year that I was graduating in September. And that July, they took out international business from the list. So there I was, right? Stuck in WA. And obviously I had, 3 months is what they give you at that time to find a job. So I took any job that came my way at that time. There was the mining boom just finished, so getting a job wasn't easy. And I found this door knocking job where I was selling some sort of an automotive insurance policy. Which was brilliant. I met some great people. I had my first drive in doing door to door. We had to go to Rockingham, Maddington. So these were tough suburbs to go and door knock in. I met some interesting characters, and this was, door knocking from 10 till 7 p.m. at night. And if you don't sell any of those brochures, you don't make money. Hell, I would have loved to give it a chance right now. I'll tell you that. At that time, I'm starting off. I didn't know what to do, what to say. And it's all about the etiquette in door knocking, right? You got to be polite with them. You got to be respectful with them. You got to pull back. But yes, so one of the doors that I had crossed over had about 4 cars in their driveway, and with this insurance policy brochure, the more cars, if you can on sell at the same house, obviously you get a bonus, right? So I was excited. Knocked on the door. This lady came out and she said, "Oh, my husband is not home at the moment. He'll be back later." I said, "Okay, no problem. I'll come back later." Crossed over the street. We finished around 6 o'clock. I was walking back on the same street to meet my team manager at that time. We should take the same car back. And I passed by the house again. And I was tired at this time, Hanif. I was like, okay, I didn't do much today. I didn't get any, I'm not going to get any bonus. I was like, I'm just going to keep walking back. And I passed by this home and I thought, you know what? It's there. Let me give it a shot. She did say, come back later, right? Knocked on the door. This guy comes out, he's having dinner, looks angry, and I said, I'm just going to give him the same pitch.
Why do blokes always look angry in these stories?
Right? Right? I mean, understandably, man. Like, I was...
What do you want?
Exactly. Get off my lawn. So...
I'm not on your lawn, I'm on the patio.
That's right. I knocked softly. I gave him the same pitch that I did at 10 a.m. that morning, same energy, as much as I could muster. And he looked at the brochure, he looked at his cars, and he said, "You know what, son, come on in, I'll buy 3. So I walked inside. He was signing the forms and collecting the payment. There I am texting my team manager. So yeah, we got it. Just give me some time. I just need to solve this. And then he asked me a question. Hey, listen, I'm a real estate agent. You're door knocking today. How long has it taken you? I told him the spiel. Then he said, if you're already door knocking, would you be interested in real estate? A friend of mine is opening a company. I'm more than happy to refer you over. And I said, shit, I don't know anything about real estate, but I'm willing to learn. This is in Rockingham, and I didn't know if they were going to call me or not. And 3 days later, I get a call from a gentleman who's starting up selling these properties. His name was Brett Quinn. And he gives me a call and he says, come into the office for an interview. I walk in, and therein started my journey in real estate. So I started admin first. I was working with multiple agents whom, funnily enough, I'm still friends with till today.
Of course you are.
Yeah, me, Anif. And, and I looked after them and looked after their portfolio. And yeah, here we are. I then moved to, because I was living in Mount Lawley at that time. And I found an agency, Harcourts at that time. They were great leaders, in their own rights, John, Michael, and Prash, and they took me in. They looked after me with the skilled visa, and here we are. I started that journey with them in 2015, I believe. So that was my first sales role that I moved into, and obviously those were tough times, as you remember. Yep. Homes were taking 70 to 80 days to sell. Buyers would come in at 20% below asking, and then you have to work your way there. So I learned a lot during those times. And I guess as a person myself, I had a lot of passion for film growing up. Film is my number one thing. Like, I did short films when I was in my early 20s, some of which I cannot show my clients, but, they were fun, and till today, I'm an avid lover of films, which is why I incorporate a lot of my love for films into my property marketing. So almost all of my listings that I have now, I take a new film, I adapt it into a 60 seconds reel, and I shoot my property videos in line with those films.
That's kind of cool for your clients, isn't it?
They love it, man. So like when I sit opposite them and I show them things that I've done, like we've done Mission Impossible. Recently we did Backrooms. We've done multiple movies that are upcoming or that are on the market. And idea is just number one, because I love it. Number two, it shows a different side rather than, hey, welcome to 16 Parliament Street, right?
Boring.
Yeah, and in all due respect to those that do it, but it's just not me, and I just try and showcase that element of difference, of uniqueness. So when I'm sitting at a listing with my clients, this is what I show them. I think this is really important because you're capturing the audience in a different way. We did Disclosure Day, which was me sitting, in a dark, dimly lit room saying, the truth has to come out. It's the truth about this home in Ellenbrook, So that's how we've shifted it, and they love it. They say, what movie are you going to do for this home? And I say, what's your favorite movie? Let's do it. Let's make it happen. Someone recently asked for Home Alone. Looks like I'm shaving and tapping aftershave on my face, for that video. But that's why we do what we do. My passion has really descended into my career, and I'm really happy that I'm able to merge them together. Because again, I'm not making movies. Although Perth Film Studios, if you're listening, let's make something happen. I'm selling property, which I'm also highly passionate about. And being able to merge them both it's a great reward for me. I wake up every day looking forward to that. So that's been my journey. And then in 2018, we came up with the collaborative network, which you're aware of.
Yep.
And if it was my love, or at least my interest in AI at that time. And it was a collaborative network of people who just worked together because I really loved the multi-listing approach back in the day. Obviously, it doesn't serve an agent's, I would say, margin or bottom line. But the whole idea with that is that we want to create an industry where people can trust more. That people can actually see us as trusted advisors, that we are working together, that we're not wolves. That was the idea behind that. And in line with that was me wanting to start my own agency, which led me to, as you're aware, honey, if you were there from day one. And I really appreciate the words of advice that you had given me because, you're someone that I respect a lot. In the finance industry, it's just the way that you have been as a person and also seeing the way you operate your team. Which is brilliant, by the way. So obviously you're a client of mine, of course, my friend. You're a client of mine before, and then now seeing you as a respected peer in the industry led me to doing my license and starting my own agency as of April of last year. It's more than a year now.
And congratulations on that.
Thank you, Anif.
I knew I'd get it out somewhere.
That's all right. You did well. We got there.
It was really hard. It's a long word. Too many syllables, really.
It's always tricky when we need that extra cup of coffee, I say.
Where is the coffee?
Yeah, that's right. But so that was...
Tell us about your business.
Sure. So I operate a very boutique company. It's me, Ravandi Rashad. He is, and now he's in his third year of real estate. Already.
Good Lord.
Time has flown for him, and he's getting into his fourth year. In fact, it's very, very proud of his achievements. He's a sharp man. He's done really well with the clients. Clients rave about his service because of how he is as a person. I think that was very important for me when I was recruiting. Is that you need to match the energy that I provide to my clients because I can't always be there.
Yeah.
And it's a process. The way we take our journey, our clients is through a journey. We say that from day one, and you'll be dealing with this person, Ravandi, when it comes down to our buyers. When it comes down to communication, you'll be dealing directly with me. When it comes down to our documentations, you'll be dealing with Rachel, and she's our admin, and she's fantastic as well. Process driven, she's dedicated, which is, I think, really important when it comes down to turnaround time. Because that's what we tell our clients. You'll receive the documents tonight. You will receive the documents tonight. If there's a delay on that, then you're fired. No. So, it needs to be that collaborative effort within the team. So we keep it small and we keep it cultured. I think that's very important. Our 4 pillars, one of them is culture, not only between the team, but with our clients as well. And we're very, very glad to see reviews and see video reviews, especially from our clients who say the same, because that is very important with reflection. And of course, not all business turns out to be glowing businesses, but at the end of the day, if we can get as many of that, 100 plus, then we are good to go. So that is how we operate. We focus a lot on sales at the moment. We partner with another company for property management, but our main focus is sales, and our goal is to bring our clients from the A to Z of the selling and buying journey. That is our objective. That is our tagline. And that's why I end every video with, here's to your property journey. It's my favorite thing to say, my friend. Yeah, so that's us.
And I endorse you guys. I've used you myself.
Thank you.
I'll continue to do so because you pay attention to detail and you actually care.
Thank you, Arif. That
You
means a lot.
actually invest personally
Yes.
in what you do for clients. And from a buyer's side
Yes.
and seller's side, I'd say that's so important.
Very well said.
Where do we find you?
Yes, so www.therealestate.times.com.au. Otherwise, I'm on Instagram or Facebook, The Real Estate Times TV. Feel free to reach out. My number is online at any point of time. If you have any questions, I'm here for a chat. Even if we're not working together, the goal is that, if you need to have a chat, you can just give me a call. Like, I would love to talk numbers. That's just me. Data, as we did before, Anif. And, you got the right person for numbers over here. But anytime if you want to know insights on the ground, feel free to give us a call. We're here to help buyers and sellers. We want to break the mold that agents are just out there for your money. We're here because, as you've rightfully mentioned, we care. So, realestatetimes.com.au.
Beautiful. Thanks, Prash.
Thank you, Hanif. It's been fantastic.
Yeah, indeed.
Until the next time.